Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And hey, it's Friday, August 30th, end of the month, coming to a long weekend. And hope you guys have a great, enjoyable long weekend, Labor Day weekend. And we got a bunch of economic news releases scheduled for today, so let's jump right into it. We got personal income for the month of July. So back in June, we had a 0.3% increase in the average personal income out there. The forecast for July was a 0.1% growth, and basically came in at forecast. So obviously, people like to see a little bit more in their pocket, but we didn't see it. Now we got the other side, consumer spending. So people are earning about 0.1% growth increase. Consumer spending for June was 0.6, so people were spending a lot in June. They figured July would kind of curb that down to 0.3%, and basically what the increase that they got, basically that's what same thing, 0.1%. So consumers were kind of breaking even right there. Now we got the core PCE. This is the Fed's favorite gauge of inflation. Plus, this is the core. Is basically where we strip out food and energy, which creates the volatility. Stands for the personal consumption expenditure. And back in June, we had a 0.2% raise in the inflation numbers, and we figured that would kind of continue in July, and actually it was a lot lower at 0.1%. Now remember, the Fed is concerned about low inflation right now. That could be too low and maybe create stagflation or deflation and pressures, and that's not something that they want. They like to keep inflation between 2–2.5%, and right now we're below 2%. On the other hand, we got the Chicago PMI, month of August, or this month. We got this is the manufacturing Chicago region, and anything above 50 is considered expansion. So right now we're barely above expansion. So month of July we had a 52.3 reading, and we figured it was going to increase to 53.5, and just not quite as much as forecast of 53. So still in the expansion region, but not again, it's very minimal in that area. Now we also got the consumer sentiment. This is where people are kind of seeing how they feel about where things are at. We had an 80 on the rating index back in July, and for the rating it was supposed to be a slight uptick, and it jumped up a little bit higher than what they anticipated, or the forecast, up to 82.1. So people are feeling a bit better than about where things are going. So it'll be interesting to see, especially the Syria talk, how that might influence in next month's readings. Let's jump over to stock market, and right now the stock market is down, even though we got some decent numbers on there, but a lot of it has to do with some statements made by Secretary of State Kerry, basically making on national television, making a case against Syria. So there could be, even without the UK, there could be U.S. could have some airstrikes in on Syria, maybe as soon as this weekend, as the UN people leave, believed to be leaving on Saturday. They could be going after they leave, or maybe next week. So this is something we'll have to keep our eyes and ears attention towards, as this could greatly affect the markets. So speaking of markets, let's also see what's going on with the bond market, see where interest rates are moving. And today we had a nice rally yesterday, so we closed above the up to 99.84, and today we're at 99.94. So we're currently about 10 basis points from where we left off yesterday. Now, depending on pricing yesterday, if the banks had fully improved the rates, it should be a little bit better today if they hadn't fully did it. Otherwise, it's about the same. Usually it takes about 12 basis points or higher for them to really make a price change, but because we had a nice little rally, especially towards later in the day, they may not have gave out better pricing towards the end of the day. They may have just rolled it over into today's pricing. All right, so this is a good sign here, and again, we could see a possible rally as potentially as a flight to safety. So if money is leaving the equity markets, as they're concerned about Syria, we could see more money coming into the bond market, which would improve interest rates. So keep an eye out for that. That potential could see a nice little rally in there. All right, thanks for watching, folks. I hope you guys have a great long weekend. We'll see you guys on Tuesday, and again, be safe.